There's a big policy shift that's set to impact the real estate market across Canada: immigration cuts. Starting in 2025, Canada plans to admit about 20% fewer permanent residents and almost 500,000 fewer temporary residents over the next 2 years. We're going from 1.2 million more people in Canada each year to 0, and that's a huge change. For the first time ever since the 50s, Canada could see a population decline. So, what could this all mean for real estate and for us specifically in Toronto? Well, let's break it all down, but before we do, don't forget, if you find this video helpful, hit that like button, subscribe for more Toronto real estate investing tips, and if you want to chat one-on-one, you can always book a call with us. This change means that the Bank of Canada is likely going to lower its GDP projections from 2 to 3% down to around 1%, because a significant part of our GDP is actually reliant on immigration growth. Now, while this shift does give more room for the Bank of Canada to cut rates, we can also expect a hit on the housing market too, specifically in rents. So let's dive into that first. Honestly, Toronto rents have been already on a downward trend since early 2024, and more recently, our leasing team has noticed that it's taken longer to fill our units too. Our units tend to be the more affordable rentals in smaller multiplexes in Toronto, and newcomers often make up a big chunk of our renter base. But since the summer of 2024, this year, we've noticed a big slowdown in demand from the rent side, and now public data is starting to back this up. Now, one of the biggest factors here is a connection between population growth and rents. We've already seen it naturally come down on its own, but now with the government planning to cut immigration numbers even more next year, we're probably going to see more of a downward pressure on rents coming soon. But let's also not forget about interest rates. When interest rates come down, landlords don't need to raise rents as much to cover their costs. Plus, when rates come down, we often see more people jump back into real estate investing, and this can boost the rental supply too. And then once you add in new programs like CMHC incentives for secondary suites and larger multiplexes, we could see more rental units coming online, and all of this can continue to put downward pressure on rents too. On the buy side, there could be some hopeful signs for potential home buyers. We're starting to see more incentives for first-time home buyers, like lower down payments and support to build more units in a home to help you hold the property. Plus, with interest rates coming down, monthly payments are also becoming more manageable. So once you add all of this up, combined with a better balance of supply and demand, home ownership might start to feel a lot more attainable, and some of the recent surveys seem to echo this optimism, and this can prop up buying demand, especially from first-time home buyers in the short to medium term. Now, let's pivot to investors, and the scene does look different here. Even if interest rates drop, we are not expecting a huge surge in investors. High interest rates have already cooled the market, and while a cut might attract some more attention to real estate, falling rents, which also translate to slower appreciation, are definitely going to reduce investor activity, and this is going to limit the pace of price increases too. Now, for Toronto condos, which has always really been about appreciation, we could see more of a decline in speculation here. And honestly, this could be a good thing for the overall market. Those who end up sticking around are going to go back to basics, focusing on rental income, positive cash flow, and building equity over time instead of chasing those quick gains. And if you're willing to put in the effort to upgrade a home, there is a solid opportunity here for better returns if you trade time for money. We're definitely going to see some shocks in the real estate market with these sudden policy changes, and it might very well be chaotic in the beginning. Probably more so on the rental side as opposed to the buy and sell side, and we really can't say for sure how things are really going to pan out. But hopefully, in the long run, we'll see a more balanced, natural market without those crazy high immigration targets and excess real estate speculation. But if you think about it, with interest rates falling and prices coming down, we're in a pretty good spot for rents to fall while still keeping cash flow positive on the Toronto freehold side. For example, you can find a 2-unit bungalow in Toronto these days for around $900,000 that needs around $30,000 of cosmetic renovations. So after operating expenses and mortgage payments, you're still bringing in $1,000 a month in positive cash flow. So what this means is it does give you a nice cushion even if rents drop more, and the situation could improve again if interest rates keep falling. Essentially, we're in a return to basics situation in Toronto real estate investing, focusing on a good balance of rental income and stable appreciation. Steady cash flow and long-term growth are key, and that's something we're all for, although it definitely will be interesting to see how all of this unfolds. And if you are interested in exploring these basic real estate investing opportunities in Toronto, feel free to reach out to us. We're not just another real estate sales brokerage. We're seasoned Toronto real estate investors who knows the ins and outs of the Toronto real estate market, especially when it comes to multiplexes. Whether you're looking for a property that's ready to rent out or you want to buy a house that can be converted into multiple units, we can help you out. Here's how it's like to work with us. We'll take the time to understand your goals, help you find great investment opportunities using numbers, and eventually assist you to buy the option that's best for you. If you need renovations, we can connect you to trusted contractors as you manage your project, and we'll be around to coach you along the way too. Once it's done, we can lease and manage your property too. If you're ready to get started, just head over to this link here and let's chat.